Hey guys, welcome back to Stock Tricks with Nick. I hope you enjoyed the 3-day break from trading as we honored Martin Luther King Jr. on Monday. That doesn't mean that Monday was quiet though. On the contrary, everyone was talking about Zion's big day. But boy, did it disappoint. Before everyone dislikes the video, I'm obviously talking about the stock, Z-I-O-N, or Zion's Bank Corporation. Not this guy, he killed it. The company reported that their profits from Q4 were down from last year, which made the stock drop 4.2%. Las Vegas Sands crapped out on Monday after Morgan Stanley downgraded them. They were down 6.1% on Tuesday. But don't worry, LVS. I'll be there in February to pick the stock right back up. Tesla was back in the news on Tuesday after their market valuation hit $100 billion, making them the first US publicly listed car maker to do so. This is great news for Elon, because if that market valuation holds its $100 billion value over 1 month and 6-month averages, he gets to acquire additional Tesla stock, a $346 million payday. On Friday, the markets had their worst day since October, as there were 2 reported cases of the coronavirus in the US. One in New York and one in Chicago? The oil industries are the most affected by this, with the logic being that less people are traveling around so they can avoid the virus. Even if the virus's impact is exaggerated, the S&P 500 closed within 1% of its previous day. So let's see how Monday shakes out before we all yell, "Bear market!" On to the recap. I made $533, which is a 4.1% return. Since opening up my Roth IRA in November, I'm up over $1,300, which calculates to a projected annualized return of over 136%. For proof, I've linked my trading journal in the description below, so you can check out all the trades that I've made. Before getting into the technical analysis side of the video, I wanted to talk about the mistakes I made this week. Sure, I'm up, but there are always things I can do to improve, and I thought it'd be beneficial for you to hear these mistakes so you don't make them as well. First, I started a position with IBM on Tuesday, after their stock closed above the Bollinger Band on Friday. This is an indicator that the bullish run is going to continue into the next day. If you follow IBM, you're probably asking yourself, what possible mistake could he have had? The stock was up 3.5% on an earnings beat. See, I sold my position that same day, before the earnings and before the jump up. But that wasn't my mistake. I trade using technical analysis, which is the practice of using past pricing patterns to predict future moves. But these patterns don't hold when there's a drastic change in news. And I had no idea how IBM's earnings were going to go, so if I were to hold the stock, I would just be gambling and not investing. And that's what Vegas is for. Thankfully, I was able to sell at the same price that I got in at, so no harm there. But going forward, I'm going to be keeping an eye on the earnings date before I get into a stock. My next mistake was not getting into Netflix on Thursday. I wanted to get in if Netflix made a high above the previous day's, Wednesday's, high, and if it was set to close above the 20-day moving average. This time, I made an order execution mistake. E-Trade's default is to set the orders as limit orders instead of market orders. Because Netflix was on a tear on Thursday, the price never dropped below my limit price, so my order was never executed. 3 shares at $336.30 would have made me $50 if I held it till Friday. Another execution error I made was when I was trying to buy a put on Visa. When I went to buy the put, I bought a call instead. Then, because the option was purchased with unsettled funds, I wasn't simply able to sell the call to get out of the position. So instead, I bought 2 puts to offset that call, and wound up with a $900 option position, which wasn't smart. And with Visa dropping on Friday, the call lost $115 of value. Important tip here, double check all aspects of your trade before hitting the submit button. Go ahead and hit the subscribe button right now, but double check your trades. This is especially true when it comes to options, as there are so many more variables. You have to pick the right stock ticker, a call or a put, a short or long, your expiration date, your strike price, and the number of contracts, and the price that you want to get in at. As compared to trading stocks, where you just have to get the right ticker, whether you're going short or long, and the price. So altogether, those 3 mistakes cost me $165, and it was all avoidable. Okay, with those lessons learned, let's go over to the E-Trade platform to take a look at what made me successful this week. The first stock we'll talk about is NVAX, or NVAX. I started this position last Friday as the stock closed at the high of the day on increased volume and also closing above the top part of the Bollinger Band. Those are 3 criteria I have for any of these breakout continuation stocks. First, that they're closing at the high of the day or near the high of the day. Second, that they're closing above the top part of the Bollinger Band. And finally, that the stock has higher than average volume. And because the stock had all 3 of these, I bought 100 shares at $5.68. And you can guess how surprised I was when on Tuesday, the stock opened up 60%. I took my profits right at the bell for a $350 winning trade. I tried the same approach with a stock called TTPH on Tuesday night with a much different result. The company decided to raise capital by selling shares at this elevated price, and as a result, the stock opened down 25% the next day. But thankfully, I knew with these super volatile stocks to only get in with a small, manageable position, so I only lost $95. Next, we have Beyond Meat, which I have traded before during its initial breakout in 2020. And after it faded from its previous peak, I kept this on my watch list because I was expecting it to coil up and then break out. So on Tuesday, after I got done with my NVAX trade, I got in with 10 shares at 117.80. This would end up closing above the Bollinger Band on high volume, so I was expecting a huge jump the next day. But I was wrong. When the market opened on Wednesday, the stock immediately fell 4%. But I was still profitable, so I let it do its thing. It rose all the way up to be plus 2% at one point before gradually falling the remainder of the day. With volatile stocks like this, if there's no clear indication that the next day will be going up, I take my profits and run. So I closed out of this at 126.68 for a $90 gain. Finally, we'll go over SHAK. And just a warning, this was a losing trade, but it was the perfect setup, as this stock had a gap from November to still fill. It had shot up on high volume, and it started to coil back just like the Beyond setup did. And at this point, I was just waiting for the stock to make a new high, which it did on Wednesday. So at the end of the day, I started my position with 50 shares at right around $72, hoping that this would close above the Bollinger Band. Unfortunately, right at the bell, it pulled back and closed a little bit below it, but I was still confident in the position. But then the next day, the stock opened up and immediately started falling down. I just had to cut my losses, which was $84, 2.33%. But this ended up being a good thing because on Friday, this dropped another 3.4%, and this loss could have been much larger. So the way I trade, I try to keep my losses as small as possible and let my winners run. Over the weekend, I'm holding puts on Snapchat, Visa, and AbbVie, and holding stock and a call on Twilio. Thanks for tuning in to Stock Tricks with Nick. Do me a favor and comment below on what position you think I'm most likely to lose money on and why. As a reminder, I link my trading journal, my stock twits, and Twitter accounts in the description below. If you enjoyed this video, please like and subscribe to the channel as I make recaps like this each week along with personal finance videos. Streak continues.